Hello and welcome. In this lesson, we will again continue with our journey with residence. Right? So let's move to our notes without wasting our time. And the last bit which is left in our notes is double taxation relief. I've already shared the screen with you. As you can see on the screen, it is double taxation relief. Now, double taxation relief, let me give you a little bit overview. Double taxation relief is a thing whereby it says if there is an agreement between the different countries, if there is an agreement between UK and other European Union countries, then what would happen is if any income arises in France, say for example, if there is an income which is arising in France, then although where it is arising, that country will definitely going to collect tax. If the income is arising in the France, then French government is going to charge some tax on that income. But the person who is responsible for that business is remitting that money into the UK. Now, if he remits that money into the UK, then UK government is again going to charge the tax on that. Now, what is happening here is that same money is being charged twice. Same money is chargeable to tax two times. Once in France and the second time in the United Kingdom. So in that cases, if the different countries of the world made an agreement between them, and the OECD, which is Organization for Cooperation and Development, has made an agreement between the countries whereby it says that if there is an agreement between the countries, then if income arising in one country, and if that government has charged some tax, then the other country won't charge tax again on that same income. Now, if there would be an agreement between the countries, then income arising in France, if say for example, if there is an agreement between UK and France, if income arising in the France and then French government has charged tax, if that person remits that money again into the UK government then won't charge any tax on that remittance because that income has already been charged tax in France. Now, that thing is called double taxation relief. Now, double taxation relief also involves, this was a bit which I just told you, this is just an agreement between the countries. Now, say for example, if there isn't any agreement, if someone in India or someone in Pakistan or Bangladesh has income there, now that country has already charged tax in their own country. However, when someone remits that money into the UK, because there isn't any agreement existed between these two countries, then UK government is going to charge tax again. Now, in this case, two taxes are being charged because there isn't any agreement exists. So that's why if happens like that, then UK government gives some relief. That relief is called double taxation relief. Now, the relief works like that. Now, whatever income I have in the UK, say for example, if I have income in the UK and I have income in Dubai as well. Now, my income in the UK, I will list down all the income of UK and I will include income from Dubai as well. So I will list down my UK income and I will add my income from Dubai as well. I will make the total of that. That is my total income, including income from Dubai. Now I will make another pro forma whereby I will exclude the income of Dubai. So it will be my only UK income. So my UK income, in first statement I will just make my UK income, and in the second statement I will include the income from another country, which is Dubai in our case. So one will be including Dubai, another will be excluding Dubai. Now this would be the difference between what tax shall we pay in the UK. Now the things happen like that, double taxation relief. So double taxation relief is simply think that when a same amount is being charged twice in two countries, then the UK government gives some relief. Now UK government says that whatever tax you have paid in the UK, in any other country, say for example Dubai, if you have paid any tax in Dubai, then what happens is we will see that how much tax you have paid in Dubai. If you have paid more than what you would have paid in UK, then you will have, you won't get any extra tax charged. Say for example, tax rate in the Dubai, although there isn't any tax in Dubai so far, but they are trying to integrate it. There isn't any tax yet. However, say for example, if there was tax in Dubai and the tax rate was 40%, however, tax rate in UK was 20%. Now what would happen is when the income is remitted into the UK, then UK government says, all right, you have already paid enough tax, so we won't charge any more tax. Now it could also happen that the tax rate in Dubai was 13%, which was less than what you would have paid in UK. The tax rate in Dubai was 13%, then you remitted that income into the UK. Now UK government says, come on, where were you? You have paid less tax this time. You have paid 13%, but what you should have paid if the income would be in UK, you should have paid 20%. Now the difference between 20% and 13%, this is the amount that you will pay tax now. Alright? So that's why, that is the way how it works, the double taxation relief. Alright? So let's go ahead and read from the notes now. What does it say? The first one, it says double taxation relief, DTR. And another interesting thing is that this double taxation relief is not only relevant for income tax, it is relevant for income tax, it is relevant for CGT, it is relevant for inheritance tax. So it could be integrated into any scenario. It could be integrated into corporation tax, and so in any other tax as well. All right. So that's why it is very, very important. The rules which you will study here, it will be relevant for income tax and any other taxes as well, because it is the same rule. The first one says the OECD model agreement, which is double taxation agreement. The taxation on particular overseas income may be governed by any agreement, in force among the two countries. So if there is an agreement, then the tax won't be charged in second country. And it says unilateral credit relief. If no relief is available, so if there isn't any agreement under a double taxation agreement, UK legislation provide for unilateral relief. Now what is that relief? Foreign income must be included gross. So all foreign income, all income from Dubai, including tax you have paid in Dubai, will be included in the UK tax computation. So then a double taxation relief is given for the foreign tax suffered. Double taxation is lower of UK tax on overseas gross income and overseas tax on overseas gross income. So this is the way simply I told you. I've already explained you. Now if you would read it again carefully, you would understand it is the same thing which I've already told you. Say for example, if you have paid 40% tax in the UK, 40% tax in Dubai, and you are bringing that money to the UK, and the tax rate in Dubai, UK is 20%, then UK government say you won't pay any tax. If you would have paid 13% in Dubai, and tax rate is in the UK is 20%, if you bring that money to the UK, then the UK government says you paid 13% there, you should have paid 20% here, so the difference is 7%, which you will pay now. So that is the relief. So you will understand it better when you do the questions. It says UK tax relief will be lower of UK tax on overseas gross income and overseas tax on overseas gross income. So lower of these will be a relief. Then it says, note the UK tax on foreign income is the difference between the UK tax on foreign income. It will be, they will make two pro formas. So one is the UK tax before double taxation relief on all income, including the foreign income. Then the another pro forma would be UK tax on all income except foreign income. So you will make two pro formas, and the difference would be the tax, UK tax on foreign income. All right. So that was our chapter. That is end of over this chapter, and we have finished our first huge syllabus area, which is income tax. In the next lecture, we will see our second biggest area, which is second important area, which is capital gains tax. All right. That's it for now, and I will see you in the next lecture. Thank you and goodbye.